Welcome to the edge, everyone. The NGX just smashed fresh all-time highs. All-share index crossed 219,000 points. The market cap blasting past 145 trillion. And we're up about 45% year to date. Access Holdings just hit about 1.4 trillion naira market cap. Wema Bank dropped 1 naira 25 kobo dividend, and the DMO is auctioning about 700 billion naira worth of bonds. We just had a new finance minister. The president just appointed a new finance minister. What are we to expect from this finance minister? And the real question here is, the Nigerian market has been on hitting all-time highs, and we've been on the bull run. So the question is, do we still have a bull run, or are we at that point where things begin to get dangerous? Dangote Refinery is loading up for a possible 40 to 50 billion dollar IPO. Is this going to be the strongest bull run ever? Is this going to be the strongest or highest IPO that the African continent have seen? Are we also facing or getting close to some level of correction in the market? If you stick around, we'll be discussing where to put 5 million naira now to hit an alpha return. Okay, so welcome and thank you for joining us. And today I'm glad to be joined by Oladipo Ajayi. Oladipo Ajayi is head fixed income and vice president at Chapel Hill Denham. Tipo, welcome to the edge.
Good day, Dr. Kaufman. Thank you very much for having me once again today. It's always a pleasure to be on the program.
Yeah, great. Thank you for joining. Everyone, this is the place to be. We're always here every weekend dissecting the financial markets and providing actionable context for investors to take a decision. If you are new to this channel, please hit the subscribe button, hit the notification bell so that you can always be notified when new episodes are uploaded. And please like this video and welcome. So Deepo, let's get into it. The NGX rather just smashed that all-time high that we talked about this week, crossing that 219,000 points, and the market is now flirting 145 trillion naira points market cap, and we've had a year to date about 45% year to date return. So is this the strongest bull run Nigeria has ever seen, or are we getting dangerously close to a correction?
Well, it depends on what perspective we are looking at it from. And we could say that we are getting closer to dangerous position when you are looking at it broad base. But when you start looking at it from sectors and begin to look at cherry pick instruments across the market, I think there's still a lot of opportunity in the market. So sometimes when you look at markets broadly, you can say, oh, market has gained close to about 45% now. How much more headroom do we have? And we are just about getting to the end of the fourth month. We still have 8 more months to go this year. We still have the impact to see the full impact of our enlistment on the FTSE index as well. So
that's
how
about
much
to come.
more headroom do we have is another factor that we need to. But I just feel that there are pockets of names in the market that we can always just look at. And this is a time where you need to now look at, do your analysis very well. You need to look at the sectors that actually feel that will benefit more from the government policies, from global issues, and the like. And you now narrow it down to the players in that sector, and then you can actually decisively pick some names in that segment. For example, if you look at what has been happening in the cement name, we'll be seeing aggressive movement in the cement name. WAPCO during the week actually touched around 300 naira during the week. I mean intraday, but he ended up closing around 295. This was an instrument that was trading around 17 before we saw the interest of these Chinese investors in this instrument. And between then and now, and I think it's not more than a year, we're seeing that level of surge in valuation of some of these names from
Yes.
around 17 naira to around 300 naira. But do you still think there's still headroom? Of course, I still feel that there's still headroom. When you look at names like that, look at the policy of the government around infrastructural development, and also look at the model that we are currently deploying across the country. The government is more like doing more like a cement road, where it's more like a concrete road. And when you are doing that, of course, what who benefit from such projects is more of these player in the cement sector. And we have three giants in this sector: Dangote Cement, we have Boa, and we also have Wapco. You can now look at these three players. Who do you think is actually currently underpriced, and you feel that will actually benefit from that? You can use that to actually make your judgments.
No, I agree with you. There are different sectors actually powering this momentum. And that's begin before you begin to slice in what the government is doing or which of these sectors are going to benefit. I think the challenge or the fear is we've been having this bull run from the beginning of the year. Are we getting to a very dangerous point where where the tides begin to turn? So if we think in terms of market regimes, are we still in a beta trade or where everything moves, or are we entering a phase where alpha return matters more, where alpha returns matters more, where stock selection begins to dominate the discourse or the type of returns that investors are looking at?
I think we are currently moving to alpha return segment of the market. This is a time where you need to begin to actually shop for return across the market. It's not a time where you just close your eyes and buy anything in the market. This is not a time for hedging effect. This is a time where you need to sit down and look at which instrument you think can give you a better return. And that's one of the reasons why when I was starting I gave an instance of how to actually go about some of these things, how to actually push some of these things. You can look at the banking sector, you can look at which one do you think is still heavily on the price, then you can make your decision from that perspective. You can look for the consumer names as well. Look at the ones that you still feel that is heavily on the price, and you can make your decision from that perspective as well. And like I mentioned earlier on, it's a time where you need to be very careful so that you are not actually locking into instruments that's heavily overpriced already. There are pockets of names in the market that are still heavily underpriced. You look at Elta, you look at where Elta is trading at LSE market, and you look at where it's trading on the NGX market. You see huge disparity in the valuation. It's almost trading 2 times of the current valuation in Nigerian marketing on the LSE. And so it gives you an idea of some of these instruments, they are still very much underpriced. And maybe because of lack of liquidity, that's one of the reasons why we are not seeing the prices moving in alliance with where it's actually trading in global market. So I think it's a time where you need to shop for alpha. It's not a time where you just buy anything and you feel that the market will move on broad base.
Oh yeah, that's interesting because I think investors need to be technically savvy now, fundamentally savvy, understanding the moment, shopping for stocks with those fundamentals that we always highlight here on the edge. So, Dipo, let's push this further. We are within the dividend season. We've seen Wema come up with that 1 naira 25 kobo dividend, ETI as well. So it looks like we are in some form of cash bonanza, and investors are really gearing up for that. So the dividend season is here. It's on fire, as I mentioned. So, and I think we're looking at Wema's return, Wema's performance. they had about 50, they are going to have about 50 billion naira in total payouts after that, massive performance, which is, pushing the stock price now to about 100, pushing them high, moving them away from the penny stock kind of tag. So which of the dividend payouts do you think actually moved investors this week? Which of these dividend payouts do you think moved the needle for retail investors?
I think I will actually say it is ETI. ETI for a long time has not paid dividend for about 3 years. So most investors were not even expecting a declaration of dividend. But ETI declared 215 kobo, and the price of the stock at the time this release was made, it was trading around 50 levels, and currently this instrument closed at 78 naira on Friday. It gives you an idea of how market was surprised and how market took advantage of these payouts to actually capitalize on that and take advantage of that for capital gain. And like I mentioned as well, just like what you said, Wema is not also bad because Wema declaring 125 kobo, of course, is a tall order. Wema currently closed at 31.30 on Friday. It gives an idea of how investors are actually shopping for some of these instruments in the market. Also, Stanbic declared 4 naira, and the payout day, the qualification day is on the 5th of May. So it still means that they are still interested in Stanbic. And also, Stanbic released their results, their Q1 results last week, and they posted about 115 billion naira compared to about 82 billion naira that they did in Q1
Q1
last
of
year.
2025.
So it gives you an idea of how some of these companies are still flying, and it gives you an idea of how they continue to actually improve in their cash flow generation, revenue generation, and also optimizing their costs so as to actually ensure that they are able to actually post huge profit after tax. And these are some of the things that investors are looking at. Investors are looking at what you are doing on the top line and how that and how you are able to actually manage that for them to actually see the impact on the bottom line as well. At Zenny Bank, we all know that Zenny Bank declared 8.75 kobo. But the qualification day for Zenny Bank was on Friday. So we still saw a lot of interest on Friday. Zenny Bank closed at 135.90 kobo. This is about first time in a long time that Zenith will actually trade above GT Bank. GT Bank closed at around 133 naira, while Zenith closed at 135 naira 90 kobo. But don't forget that
GT have been marked down.
That's ex-div, but
yes,
Zenith is currently trading cum div. So you mean by Monday we expect Zenith to open ex-div. And if Zenith can open ex-div, it simply means that what that means to the market is that there's still opportunity for people that actually want to actually take advantage of the market. Beyond they are not dividend chaser, but what they are looking at the good valuation. So it simply means that if Zenith open around 128 levels on Monday, it could be a very good opportunity for some investors that are still looking to actually take advantage of the market. And there are still a lot of names in the market that you can still actually chase for dividend. We have Boa, we have Seplat, we have Dangote Cement, and a couple of the others in the market that you can still qualify for their dividends. And these are some of the reasons why we still continue to see demand across board because of investors that are more like dividend oriented.
Yeah, I mean, we touched this the last time we spoke about Zenith, and I mean, you were saying you expected them to pay something high, and then we had comments from our viewers also saying they were looking that Zenith was going to pay something around maybe 12 naira, but obviously the market seems to be happy with the dividend they declared, and that's why we've seen that reaction. and the stock price. Back to Wema. So Wema is also topping the volume in terms of trades in the last week, as well as Access Bank as well. So is Wema, because I asked that this earlier, is Wema now breaking out of that penny stock territory?
Well, it's not that Wema is breaking out of that penny plus territory. It's simply that they are broken out of that region. And
You mean they've
it's
broken
not
out already?
it's not the same Wema that you used to know. We're seeing improvement in management strategy. I was seeing a lot of investment into the fintech segment of the bank, and we've seen that actually impact both on the top line and also the bottom line of the company. And Wema that used to be a stock trading sub 1 naira. Now
Yeah,
it's
50
trading
kobo.
around. It's trading at north of 30 naira now. So it gives you an idea of how you can actually move from more like a penny instrument to more like a growth instrument, and that's exactly what we are currently seeing on Wema. Wema now they've auto recapitalized. They are no more a regional bank. They are stronger now, and of course, they are actually whisper around the market on Wema trying to acquire some other banks as well, just to further expand their capacity and also get footholds around almost everywhere in the country. So Wema is not the bank that we used to know. Wema is totally a refined bank as we speak currently, and that's one of the reasons why we are seeing interest from investors. And one thing about investors is that investors want to see a company that can actually continue to actually declare performance on a regular basis. And we have seen that if you check in the last 3 years, Wema has been declaring a very good performance back to back. And that's one of the reasons why we will see a lot of interest in that instrument.
Oh, awesome. So before we, move on, will you be buying Wema?
Yeah, because
Or
when you look
at
at where,
current levels, or you wait for some pullback?
of course, for me, I will wait for a bit of pullback, Wema,
Okay.
because when you look at price to book, it's still not of one now, because when you check, when you look at, there are still better instruments in the market that can give me a better
That can give.
opportunity.
Okay.
Yeah,
Okay.
Access is still like 0.25 price to book. Wema is already above 1. So it gives you an idea
Yeah.
that there's still a lot of underpriced instruments that will give me better return.
Okay. So let's talk about Access Bank now, because I know it's one of the stock we talk a lot about here on the podcast. So we've seen that surge last week, and I think it traded as high as was it 33 naira?
Yeah, yeah.
Thereabout. So it traded as high. So we've seen that surge. The market cap is now about 1.4 trillion. And it surged over about 50% year to date, trading around that maybe 30 to about 33 naira this week, with huge volumes as well. So is Access Bank now the poster child for the banking rally, or is there still some meat left on the bone for latecomers, late entrants? Would you say there's still some opportunities left for anyone looking to purchase Access Bank now, or you would wait?
Well, for me, and you mentioned that Access Bank actually hit 1.5 trillion market cap, and but don't forget that the same thing that Zenith Bank has celebrated 5 trillion market cap this week as well, and so it gives you an idea of the huge differential between Access and Zenith currently. When you look at Access Bank for me is still heavily on the price. When you look at it on valuation, when you look at it on capacity, when you look at it on asset side, and I think one of the reasons why a lot of people are still very skeptical about Access is that people are currently waiting for the result of the bank. Because when you have the results, it gives you an idea of the direction of travel of the bank, and of
Yeah.
course, you can have investors call where people can actually ask questions around their view around the bank and what they think has been more like bothering them around the journey, the way of travel of the bank. So when you look at Access, for me, I still Access see heavily on the price. Access is currently trading at 32 naira. Wema is trading at 31.30. Access valuation is our 0.25 price to book. Wema is north of 1, and GT is about 1.25 or about 1.3, even close to about 1.4. Zenith is about 1.1 or 1.2 levels ground. So when you look at that, it tells you that Access is heavily underpriced. Access is trading 31 naira. Zenith is trading 135 naira. So it simply
But can
means
we
that
just look at can we compare it that way though? I mean, can we compare it that way? Because there is some reason why the market is placing premium on GT. There's a reason why the market is placing premium on Zenith. There is also a reason why the market is refusing to move on Access Bank.
Yeah, that's exactly what I'm saying. And don't forget that there's the bandwagon effect in trading. There's also the contrarian traders as well. And
Okay.
what I'm saying, I'm looking at it from this perspective of the contrarian, where you
Okay.
feel that there's a lot of value in the market in that particular instrument. But maybe people are not seeing what you are currently seeing, and that's one of the reasons. And when you look at where, like I've spoken around the valuation and to actually show that Access is heavily on the price. And I think one of the problems that Access had was the acquisition across Africa and how they failed to actually combine all this big business together in good time. And sometimes last year, the MD of the company of the bank mentioned that what they are currently going to do, there's no more acquisition. What they want to do is to actually sweat the acquired assets. And that's one of the reasons why. So market's currently waiting for what is actually the result of sweating these assets. And don't forget, the escapade of assets last year, how they actually did not release their result on time, how they were punished for that, how at the end of the day, when they released results, the central bank mentioned that they cannot pay interim dividend. And the market still went ahead to actually punish the stock based on that as well. And currently, market is waiting to see how Access can actually redeem their image. Dr. Kafo, if Access posts a dividend of 4 naira now, I can boldly say that the stock will trade 15 naira conveniently, based on where the market's currently trading now. And so it gives you an idea of So it gives you an idea of what that could mean. Access is paying 4 naira. Zenith has done about 10 naira for full year. GT did way above that. And don't forget that Access did not pay interim dividend. And paying 4 naira should not be out of place. And of course, the worst case scenario that market is expecting is that anything less than 3 naira is abysmal. So I feel that if Access can actually reward or compensate their investors very well, I'm very sure that we'll see repricing of this instrument accordingly.
Okay, yeah, I mean, let's look at it this way, Dipo. So if we decompose the demand for Access Bank, how much of that is how much of that upside is still maybe coming from their balance sheet expansion expectations that they are going to begin to deploy the funds? We are going to begin to see the synergistic effect of all the acquisitions they've made versus their actual earnings expectation, their visibility, and the potential to actually deploy these funds in a manner that is going to then begin to bring benefits to investors.
I think I can say that it's half and half because when you look at their investors, that basically while they are investing in your business is to see how much cash flow they can actually get on an annual basis.
Yeah.
And also they are investors that are long-term investors. One reason why they are investing now is because they feel that your instrument is underpriced, and they're actually investing for a long haul. And I was talking to someone during the week that I remember when I was speaking to someone about Guinness. when Guinness during their deal with Tolaram, and the stock was trading around 80 naira. And I told the guy that just last week, Guinness is trading over 400 naira. So it gives you an idea of how you can enjoy huge capital appreciation if you have patient capital. Beyond looking at the cash flow that comes in form of dividend payment, you also need to actually understand the area of travel of the company. If it's in alignment and you feel that it's a good one, it would not be a bad idea for you to actually join on that long journey. And last week, we saw what happened on First Holdco. First Holdco traded as high as 70 naira. So it gives you a picture. The same First Holdco sometimes was trading around 14 naira. And between then and now, we're seeing close to it. And don't forget, when First Holdco released their results, a lot of people felt that it's all doomed. And we saw a bit of retracement. And the people that I mentioned,
I think it retraced, was it to about 40, was it 45 or 46?
Yeah, it retraced to around 40, 45 levels.
Yeah.
And like I mentioned, there are people that understand and believe in the journey or in the area of travel. And some people feel that what they've done is the best. They've just cleaned their books and they can actually fly lighter. And feel that there's no other time for you to actually lock in up than now. And we've seen how First Bank is trading as well. So I also think that that also will come on Access Bank. And so those people that can actually wait on that long haul will be the ones that will actually enjoy the most. And but for those people that are actually about the dividend income, of course, they will also be able to actually satisfy their own investment decision.
Dipo, at current levels now, does the banking sector, looking at the banking sector as a whole, does the banking sector still offer that asymmetric upside? Or are we now at a stage where investors need to differentiate between capital rich but return poor banks? Okay, those that can actually compound shareholder value. I know we started talking about some of them. We talked about Access Bank being able to pay 3 naira, or whether they are going to move to 4 naira dividend. Can you talk more about this? Are we still expecting that upside? Are we at that point where it's now beginning to look as if we are reaching a plateau?
Well, I think we need to, it's getting to a level where we need to be careful on some names. And of course, do they have upside? Of course, there's still upside, but just that you need to be very careful, because you may think where they are coming from, they can still duplicate that level of upside movement. You need to be very careful with some names. And so what you need to do is to actually ensure that you understand the business dynamics of these banks, understand how competitive they are in the market, understand the level of capital they are currently sitting on, understand how efficiently they can actually manage their cost, understand how innovative they are currently, because these are some of the things that will open that opportunity for them to actually continue to actually take a larger chunk of the market share. And for me, I still feel that there's still a lot of upside in some names. We just saw the result released by Stanbic, and like I mentioned, from 82 billion to around 115 billion. It gives you an idea of the fact that some of these companies at the banks, they can continue to actually sort out their capital better and continue to actually post a better return. And we've seen what Zenith also did in their full year. We are still expecting some of them to actually post their Q1 results, which to a great extent will also give us a picture on how they are able to actually sweat their capital. And don't forget, in 2024, a lot of people felt that, a lot of these banks enjoy return, this humongous return as a result of the FX revaluation. And but this bank actually replicate this and also did better in the year 2025. So we're waiting to see how are we still expecting a better 2026? And also with the result of their result for Q1, that will go a long way in helping us to actually see clearer on the way of travel of some of these banks.
Yeah, one of that thing, Deepo, is we are currently at this period of the dividend season, and historically, dividend capture trades on the NGX have been fairly mechanical, running up to the qualification. So once people qualify, then we witness a reset. But now we're beginning to see increased institutional participation, increased confidence in the market. Do you think the market is beginning to absorb dividends more efficiently? We've seen that that rally ex-div from GT. Zenith is going to be marked down. Is the market beginning to absorb dividends more efficiently now?
Yeah, what we've been seeing is that we are seeing reinvestment by some of these investors in the market.
Yeah.
So immediately they actually get their dividends paid. What they do is that they actually come back to the market to reinvest in the same instrument. And it's more like compounding their investments in that segment of the market. I think that we are seeing more like a more matured market now. We are seeing a more matured investors in the market. And on the back of that is why we are seeing that a great decision around investments. And just like what you said, Zenith will be marked down next week. So we expect to also see that rally post markdown. So I won't be surprised if at the end of the week, Zenith actually closed back around 135, where he actually opened, where he actually closed before the markdown. Because we've seen that happen to GT as well. So if that has happened to GT, of course, it's actually very, very possible for us to see the same thing happen to Zenith Bank. And also, we've been seeing a lot of interest from foreign investors in some of these names. And like we said, I think it was our last time that we said that could it be that they're actually front-running our enlistment back to
on the FTSE index.
So could it be that a lot of these investors are actually taking advantage of the market ahead of that? Because don't forget that if you want to mention the banking segment, of course, there's no way you can actually talk about Nigerian banking sector without talking about Zenith and GT Bank. Because they're more like the signature of all eyes for investors. So I think that we are seeing more matured investors into the market, and that will actually continue for some time.
Yeah, Deepo, before we, switch gears now, I think our viewers will want to know, what's your expectation about the potential upside that Access Bank still have? They're currently trading around 31 to 33 Naira. How high can they go, right? I already asked, is there still opportunity to invest in Access Bank, or are people late to the rally?
I've seen a lot of banking analysts covering these names, and when you look at their target price, I think the least I saw was about 45 Naira. So a lot of them have revealed that you will actually trade 45 Naira. And like I told you, the only downside to my belief in Access is if they actually fail to deliver a very good dividend to investors. If Access can actually pay a minimum of 3 Naira dividend, of course, we'll likely see a bit of upside rally on this particular instrument. Last week, what you saw in the market last week was
dividend yield of maybe about 9 or 10%.
Yeah. And last week, what we saw on Access Bank, it wasn't just a cliche. And when you see the volume that actually went through in the market, and it tells you that there are a lot of investors that are actually looking at to actually buy this instrument. Even there are a lot of some sellers in the market but in the last week they suddenly become buyers to some of these instruments. So it gives you an idea of the fact that it looks as if it's a good time. But we are actually still waiting for for the results of the bank, and that will, to a great extent, gives us a clearer picture on the way of travel of the company.
Right. There you have it, everyone. If you're looking to position in any of these names, there you have it. You have the investment guide, the forward guidance, the expectation for some of these banks, how high they could go, and then how you should also understand the market, understand the names that you're trying to invest in. But obviously, it appears the direction of travel based on what Deepo is saying still looks upward. So Deepo, let's switch gears and talk about the fixed income market. There's going to be this 700 billion naira bond auction coming up next week, reopening for the 2030, 2032, 2035 papers. We've seen that strong liquidity in the treasury bill market and yield compressing in the treasury bill market. What's your expectation for this auction?
Well, the market has been very soft, and I know thanks to the crisis in the Middle East, we've seen elevated inflation figure, and that to a great extent actually reduce chances of us seeing a new rate cut
Rate
very
calls.
soon. And that the market has to actually price in some of these important. And on the back of that, we're seeing rates actually trade D levels. So for this auction, I think rates will actually close around 1670 levels. And my view, reason why I'm looking at that is currently that's where market's trading. And for DMO is not desperate. We've seen them demonstrate that over a couple of times. And DMO could actually under a lot, despite the fact that what is on the calendar is about
700 billion naira.
so I won't be surprised if at the end of the day, if at the end of the day what was allotted was just maybe about 500 billion or something like that, just to actually control
The
the
cost.
cost of borrowing for the DMO. Their own duties, as much as they want to borrow, they also want to minimize the cost of borrowing. And for them, there's a lot of liquidity sitting in the system. We've seen an average of about 4 trillion sitting in the system on a week-to-week basis. And that gives you an idea there's liquidity in the market. So it simply means that why do I need to borrow at outrageous rates when there's a lot of liquidity sitting in the system? But however, investors will always want a better return for their money. And so far, I think for this week, we'll likely see rates actually close between 16.5 to 16.70 across these three maturity that are on the calendar.
So within 16.5 to 16.70, you don't expect the 2035 to print beyond 16.70, right?
No, I don't think so because 2035 is always in high demand, and we're seeing a lot of PFAs, portfolio manager, always running for this particular instrument. So the last time the instrument was in the market, we saw more like an yield result where he actually closed lower than the 2034 that was on the calendar. So I think that the best we can get is to actually get that instrument to print around 16.70 at the auction.
Okay. Do you think the current yield levels reflect a steady state inflation environment? Is that what is reflecting, or are we seeing some embedded risk premium that could then unwind if the macro conditions were to stabilize moving forward? Is that what you're saying?
Well, I think the best way to answer this question is to look at where yield was before all this crisis. Yield was actually around 15 now before all this crisis actually started. And now the yield is currently around 16.5, 16.7 level. So it means that we already have about 120 basis points risk premium from where market was before this crisis. So it means that if there's any de-escalation of this crisis in the Middle East, and that the global economy return back to status quo, I think there's every tendency we will likely see market share this risk premium, and we'll likely see rate actually dive back to the 15% region. That's one thing about markets. Look at what's happening on the long end of the curve. The market has been trading flat on the long end of the curve. At the 50, 53, the 49, they've continued to actually trade around 1470, 1450 levels. So it means that because there are depth of supply of these instruments in the market, so it's very difficult for you to actually reprice them accordingly. And so that's what I feel that immediately we see more like markets or the global economy crisis, the crisis in the Middle East actually disappear. Of course, we expect rates to actually moderate as well, because it simply means that the hope that there will be rate cuts will actually come back alive, and market will start taking advantage of that.
I agree with you. The longer tenor reflect the term structure of interest rates. They show us that pure expectation theory that we expect yield over a long time to be lower than where we currently are. That's why those instruments are trading sub, I think, 15 levels. The 2053, the 2050 papers. But also early in the week now, the president announced that the government was going to be borrowing another $516 million to fund the Sokoto Badagry superhighway. I mean, that's on top of the billions already approved recently. So Nigeria appears to be crawling into that significant debt overhang territory. We're now looking past over 155 trillion naira in debt. So the question would be, is this infrastructure borrowing smart, long-term play, or are we walking into a debt trap in your estimation?
So I think I'll look at this thing from two perspectives. In terms of long-term view, I think you can boldly say it's a great call. Because when you're looking about when you want to create a $1 trillion economy, of course, you need to actually aggressively develop the economy. And one of the ways to develop the economy is to actually create infrastructure. We've seen what has happened on the Lagos Calabar Road, and how the number of people that actually were employed on that project. We've seen how much the project has actually, one way or the other, improved the standard of living of people. And it's the same vein as well. If the government can actually do that on that angle, of course, it makes a lot of sense. And but my other concern is that we also need to be very careful because there's always that thin line between being focused on actually borrowing for infrastructure development and also getting to actually push yourself into a corner where it becomes very difficult for you to actually service your debt obligations. And currently, Nigeria still has capacity to actually service a debt obligation. But my concern is that we don't have so much headroom like we would have in the past. And so when you are servicing your debt obligation with close to about 40% to 45% of your revenue, of course, you need to be very careful. It calls to question that then it simply means that you continue to borrow, because it simply means that you only have about 55 to 60% of your revenue available to actually fund your budget. And if you actually look at the current expenditure, I'm sure that will take about close to about 50% of the budget. Simply means that you have a meager sum of about 10% to actually cater for infrastructural development. And what will happen next is that you go back to borrow, and you get to a level that your cost of servicing debt will now be more than 50% of your revenue. And don't forget that there was a time where we were servicing our debt obligation with about 97% of our revenue. And that is, for me, that is totally out of place. I understand that we need to actually develop the economy. I understand that infrastructural development is very key. I understand that these are some of the things that will bring foreign investors into your market. But I just also think that we should not throw caution to the wind because if we continue to borrow in this regard, you don't want to get to a level where your case will not be a case of Ghana or a case of Ethiopia, where when it's time comes for you to actually service your obligation, then you are now finding it very difficult to actually meet your obligation as a when due. So I applaud the fact that these borrowings are not for consumption, and that is a very good one for me because if you are borrowing to pay salary, I remember some years back we were borrowing to actually pay salary. I can't forget that package,
period,
borrowing package under Paris Fund that were actually granted to governors, and because they were finding it very difficult to actually meet their recurrent expenditures. And but now I think we are on a better place, and so I don't think that I feel that we should need to be very careful so that we don't actually fall deeper into that deep pit. So for me, I feel that the government needs to be extra very careful around this borrowing.
Oh, yeah, one of that concern, though, especially for bond traders or bond investors that might be watching this, is does the increased sovereign borrowing now introduce like long-term risk that could eventually now weigh in on bond valuations?
Well, you know that very well because when you have too much of security in circulation, it will actually further push you upward. Because the market thrives with depth of securities in the market. And that's one of the reasons why when we're talking about the long-dated instrument. The last time we had one was 2020, I think it was 2023. That was the last time we had any long-dated instrument. And I think that was the year we issued the 30-year bond that will be maturing. That will mature in 2053. And the reason why they are currently trading sub 15% was because there's actually depth of supply of this instrument in the market. So when you have a market that is awash with security, what it will mean is that you are giving investors a lot of options to pick from, and also the investor determines rate in that kind of market. But in a market where there's actually short supply of security, that is a market where you tend to actually see yield drop, and that's a market where you think you tend to see prices actually going up. And that's the market where you see government being able to actually borrow at a reasonable level.
Yeah, Deepo, there've been, I'm sure you must have seen it, this news making rounds by the comments by the former central bank governor, Lamido Sanusi, where he said, if we are no longer paying subsidy, where's the money? And why are we borrowing this much? Why is the government borrowing this much?
So there's some things that we need to clarify very well, and
that'll be important.
Yeah, SLS is someone I actually respect to a great extent, but I think there's I have a concern with that statement. Let me explain myself around it. Then we were borrowing to pay subsidy, and now we were borrowing for infrastructural development. Don't forget that it's not that removal of subsidy does not mean that we have better revenue. The removal of subsidy simply means that because if before now you were borrowing to pay subsidy, so it simply means that it's not that you have the money, you were borrowing the money to actually fund.
So it means you kind of just switch the utilization of the proceeds.
Exactly. Okay. So what's just happening now is that you are not borrowing for consumption, you are now borrowing for infrastructural development. So it's not that we have the money we are somewhere. But we now stop using the money to pay for subsidy. Of course, what that means is that we are free of cash, and that cash can now be utilized for some of the infrastructural development. But if what has happened in the past was that we were borrowing to fund subsidy, it simply means that currently what we are doing is to borrow to actually fund infrastructural development. And as much as I feel that this is what is currently happening, I also feel that as well, the government should actually throw caution to the wind to continue just to borrowing, just to continue to borrow without any restraint. And as much as I agree with that, some of these projects are great projects, and they can actually get to actually bring or expand or take Nigeria to that 1 trillion economy that the current government is currently looking to actually actualize. But I also think that we need to be very careful, because I would not mention there was a state at a particular point in time that actually told this land. The state was borrowing aggressively at that particular point in time for infrastructural development. And at that particular point in time, well, something happened. And what happened was that the price of oil had dropped aggressively in the international market to around $28. Yeah. It got to a level that even the monthly allocation to the state was negative at a point in time, because some of these are borrowing because they're actually backed by the full-fledged federal government, and you need to actually deduct them as source. So you get to a level that you already over-leverage as a result of that. So we don't want to get to a level where if there's any shock in the global economy, it can actually push us to a level where we are unable to actually make good our obligations. And don't forget that this shock would never tell you that it's coming. I was telling someone recently that I think IMF was in haste to tell people to actually take haircuts because the same Ghana that the investor community actually took haircut of about 30% on their instrument. They are already back, also bouncing back better now. They are enjoying a lot of cash flow from oil. They are enjoying from high gold prices. Also, they have been able to actually capitalize on the price of cocoa in the last 2 years as well. So when you look at that from that perspective, when any shock will come, it doesn't mean that it's more like a long-term, will have a long-term effect. But it's just at that particular point in time, if you're unable to actually make good your commitment, what it will mean is that the global investor community will actually have another perception about you.
Yeah, I think that makes sense. That position makes sense. We're now substituting the proceeds of the borrowing. Instead of it going to paying subsidy, it's now going to finance infrastructural development. Okay, so we have a freshly minted finance minister, Taiwo Yedele. So the president appointed Taiwo Yedele the tax reform architect, and who spent about 2 minutes actually as a finance minister of state, and now he's the substantive finance minister and coordinating minister of the economy, replacing Wale Edun in what some people are referred to as a surprise cabinet reshuffle. What does this mean for the market sentiment and policy continuity? If you can just give us a brief, understanding or background about Taiwo Yedele and what his background can give or guide us to see the type of policy reforms or policy directions that he might take going forward.
Well, like we all know, Taiwo Yedele is actually a technocrat. He's a tax guru, and I guess that's one of the things that actually led to the poaching by the president of Nigeria. He was made the chairman of the Presidential Fiscal Planning Committee, and part of the responsibility is to actually overhaul the tax system in the country. And I remember at the time he mentioned that we have close to over 200 taxes that has been paid by Nigerians, and they came up with a lofty report around that and how they look to actually adjust that. And after some time, just like what you said, just for 2 minutes, he was made the Minister of Finance for State. And just the third minute, we noticed that he was elevated to become the substantive Minister of Finance. And for me, I think he's someone that understands the trajectory from the beginning to the end. He was saddled with the responsibility And what they did was they did a lot of research to
Yeah.
see what has been the problem of Nigeria. They look at what is our tax to GDP in comparison to our peers in Africa and also globally. And they came up with ways to actually improve the revenue generating capacity of the country. And for me, who else do you think can actually drive those policies, if not the ones that actually did the research and actually came up with some of these generate revenue? And don't forget that the problem that we have in the country, I don't think we have the problem of expenditure. I think the problem of revenue is the problem of Nigeria. And why I would say that is when you look at compare our budget to the budget of Kenya, compare our budget to budget of South Africa. Nigeria budget is not half of Kenya's budget. Nigeria budget is not quarter of South Africa budget. So when you look at it, it's not that our budget is so much humongous that we feel that it's just because we are not generating enough revenue to be able to actually fund some of these obligations. And these things are things that you need to do. I will talk about the Shokoto Badagry way. Of course.
Yeah. Sorry, Deepo, sorry for cutting in. So some viewers will want to question. So is the way out just to tax everyone? Is there other ways that government is going to create that enabling environment to make the economy buoyant so that the economy can begin to be productive and then we have something actually to tax? A lot of people are groaning, right? So
So,
it seems to be like the
so,
focus is just
so,
to increase taxes. Or I
so
mean,
if we look at it critically to be realistic, there's nothing
yeah,
like tax increase. And the people at the lower cadre, of course, if you look at the new tax system, a lot of them were actually exempted. And even at the end of the day, if I was doing an analysis for you to start feeling an increase in your old in the new tax system over the old tax system, of course, your annual paycheck will be not of 35 million for you to start
okay,
saying, oh, there's increase. Or so it simply means that if your annual paycheck is be around 25 million, of course, you still find out that you are paying lower tax in this new tax regime than what you used to pay when you compare it to the old. And don't also forget as well that a lot of things has been done as well in terms of the small scale and medium scale enterprise. Before now, it used to be 50 million naira worth of turnover. But now it has been increased to 100 million worth of turnover before you can actually get taxed. So it simply means that if your turnover is still around 100 million, you are totally tax exempt. And so what I'm saying is that the new tax system is not to actually tax people aggressively. It's to bring those who have not been paying tax into the tax bracket. A
okay,
lot of people have not been paying tax. So what has been happening is that what we have been using to actually fund or create or develop the economy has been tax paid by the little ones. So what the government is trying to do is create a room where nobody has, in Nigerian, you need to file your return. You understand? So while you are filing your return, of course, at that particular point in time, you'll be clear. Because I've seen a lot of people filing returns that have never done that in the past.
yeah.
And
I was going to ask you, what's the update on that? When are Nigerians expected to file taxes? And then please add this to your response as well. So, do we expect Oyedele's coming to strengthen economic reforms, to stabilize the naira, and spark fresh investor confidence in the market?
yes, there are two ways to it. Firstly, the cutoff period for the tax filing, I
Mhm.
think it has expired, but I need to double check if there's been another extension.
Yeah,
It was
I
supposed to
thought
be 31st.
I read somewhere it
Yeah,
was March 34th, but I'm not too sure about
but yeah, it was March 31st, but it was further extended to April 16 or thereabout.
it.
But
Okay,
I need to check whether he has further extended as
been
well.
extended.
Because
Okay,
don't forget that this is about the first time that you are getting a lot of Nigerians to actually file their return.
yeah,
So I
tax.
think
Okay,
you need to give them a bit of window because a lot of people don't even have an idea or way or how to actually go about these things. So on
There
the
needs to be a
impact,
lot of education on that.
yeah, on the impact on the naira. Naira is not a function of the fiscal policy; it's more of the monetary policy guys,
No, but they have
and
to work. They have to work
yeah,
together. They
that's
have
what
to
I'm
work
saying.
together.
That's why I said that. That's why I said that it's more of the monetary policy guys because it's within their control. They are the one that is saddled with the responsibility to ensure the stability of the currency. But what will actually ease the work of the monetary policy guy is that symbiotic relationship between the fiscal policy guys and the monetary policy guy. And I think the outgoing Minister of Finance actually did a very good job in that regard. Maybe because he has been a pal of the CBN governor for a long time, because he also served under the president when he was the governor of Lagos State. So I think for Taiwo Oyedele, one of the things he's bringing to the table is his expertise in the area of actually revenue generation. And also beyond that as well, don't forget that he was the chairman of the fiscal policy, presidential fiscal policy committee. And when we say fiscal policy, it's not only tax. You understand? And that's why when he speaks, he doesn't speak only about tax. He talks about the whole segment of the fiscal policy, how we can actually optimize activity and actually improve the capacity of the government to actually generate revenue. And the fiscal policy responsibility is key. The key responsibility is revenue generation. Because if you cannot generate revenue, of course, you get to a level where you will not be able to actually perform your responsibility very well. So I think on the part of that, it will do well. But the perception by the international investors is my concern. I was on a call with one of these investors yesterday, and his view was that, are you sure there will be a rollback on the capital gain tax, considering that the chairman of the committee is now the Minister of Finance? And my answer is I doubt that will happen, considering that this person actually felt that a lot of investors have been enjoying huge returns from the market. We'll be talking about market. We mentioned that the market has actually gained about 45% this year. So what it simply means that if you have generated this level of alpha in Nigerian market, it will not be a bad thing for you to actually pay tax because so I think that on that perspective, the foreign investors may have a bit of food drag around that. But I think in the long run, what will actually determine whether they continue to come in or not is the valuation of our market.
Yeah, and I agree with you. Taiwo Oyedele, an expert in policy and fiscal reforms. He's well capable to engage international investors, to engage international community to reassure the international community, reassure the market of policy continuity. That's what he needs to get to do. His team needs to be out there ensuring the market, ensuring international investors of what he's going to bring on board. Obviously, he knows how to get across to the different segments of the markets, both locally and the international community, to continue to push forward that. So I don't think there's going to be a major U-turn in the direction of travel for the economic reform. Dipo, let's talk about this Dangote IPO. Just to briefly, the Dangote is gearing up for what could be Africa's biggest IPO. I think about 10% stake of a potential 40 to $50 billion evaluation, which could raise anywhere between $4 to $5 billion for expansion. The prospectus is expected this month. Subscription possibly will open early May, with primary listing on the NGX somewhere around June to July of 2026. We're also expecting Pan-African cross listings So the question is, how close are we really to the actual opening, and what's the pricing expectation that investors should expect should have, and what does this mean for the ordinary investor out there who might be looking to have a skin in the game?
Well, based on what you have actually mentioned, you're absolutely right. And the expectation is that the Dangote will list by media, sometimes in July. Just like what you mentioned, we expect to start seeing a lot of activity around their instrument from the month of May. And by the end of June, I'm sure they would have completed the IPO. And like we mentioned, this IPO is not Nigeria IPO, and we need to get that right very well. And a lot of foreign investors are heavily going into actually invest in this catch cow business. And
But
beyond
Nigerians
the
are taking ownership of it.
that's what I'm saying. Beyond that, just look at a lot of investors, retail investors too. A lot of
Yeah.
retail investors are waiting to actually take advantage of this. And one of the reasons why people are actually looking at it, that you've come to understand that this business is a great business, and beyond the refinery, you have the fertilizer business. Also, you have
Mhm.
other segments of that the business as well. And you've come to see that it's a business that bring cash on a daily basis. This is a business that bring cash on a daily basis, and everybody wants to actually have their own fair share of the cake. Dr. Kava, I won't be surprised if we have like 10 times over subscription of this IPO.
I'm
Because
expecting that as well. But
uh, because um,
the question is, what's the pricing expectation
well,
for investors?
that may be very difficult to make a call around. And for me, I'm just trying to actually put my head around 1,000 naira, and just if this is not a stock that you actually be expecting to buy for 100 naira or 30 naira or something like that. I think that when he's listing, he will likely list close to 1,000 naira, if I'm not wrong. Because when you see businesses like Sepla trading around 12,000 naira in the market. You see instruments like Airtel trading close to about 4,000. So there are a lot of instruments that are already trading close to 8,000 naira in the market. So I won't be surprised if this stock is coming to the market around 8,000 naira. But we'll actually keep our finger crossed, waiting to see what will be actually the price at which they will list. But however, the price at which Dangote is listing in the market, I made bold to say that
Is
this IPO will be one
will
of
be
the biggest
oversubscribed.
in Africa. And when you look at the oversubscription, I mean, it will be one that will have the higher level of oversubscription in Africa because of the demand or the interest in the business.
I agree with you. And again, I think the pricing depends on the number of shares that's going to be issued.
Yeah.
So if they are looking to issue maybe 1 billion, 10 billion worth of shares, that would obviously impact the pricing. So Deepo, let's begin to custom now. We are at that section where we answer questions from our viewers and also provide some tactical guidance. So we have this question, as you can see on the screen, from one of our viewers, at Izuchuku, says, very informative. Please ask your analyst why Transcorp PSC has stayed within 45 to 50 naira range for some time now.
Yeah. One thing about the business is that we keep talking about understanding the dynamics of the business. Uh, um, Transcorp is a business that actually operates in the hospitality industry, and
Mhm.
you need to actually check the performance of the business. And I think the result they actually
The
released
performance of the
recently
sector as a whole
of
as
this
well.
sector as well. So when you look at in that segment of the market, how many of the competitions are actually thriving very well or actually performing very well? And Transcorp is a good stock, and for someone just holding for future benefits. Don't forget, once at a point in time, we have this Transcorp in our portfolio for 1 naira. And
50 kobo.
yeah, you understand. And what we're talking about, we are still talking about. I think it was um, when it was around 12 naira that they did consolidation of the stock, where I
Yeah.
think they did 4 for 1 or so or something like that, where they now actually had to take it to around 48 naira. And but currently, what reason why we've been seeing more like that stagnant is because that we've not seen a great level of performance from that industry or from the
From the
business
company.
itself.
Okay.
But as the company been performing in terms of profits, yeah, but maybe not being enough to actually excite investors. And again, in a situation where you have limited capital, of course, what you do is to actually allocate to that segment that gives you a better return. And I think currently Transcorp is not among that segment that's currently giving that level of return. And for me, I feel that the owner of this instrument can as well just hold the instrument. It's an instrument that you can actually hold for a long time, and I think Transcorp is an instrument that can actually trade 100 naira. But just that, what is the opportunity cost of that
Of
decision?
holding it. Yeah.
That's one thing you also need to actually consider. And that's one of the reasons why I feel that Transcorp has been a bit flat for some time.
Okay. There you have it. Please continue to send in your questions, and we'll be sure to get responses when we meet. Okay. Deepak, so if you have like between maybe 5 million or 50 million naira fresh capital right now, where exactly would you deploy the funds? Is it to have some dividend plays with the likes of Wema, ETI? We don't know what Access Bank is going to come up with, or are there some other banking names, or are you going to be looking at fixed income? Are you just going to wait patiently for the Dangote listing? Where would you
I,
deploy
I,
your
I'm
money?
actually, I will actually have to actually allocate the money appropriately. And
Yeah, tell us.
I will wait. Will I wait for Dangote listing? Of course, I will. Certain percentage of this instrument will be waiting for Dangote listing. But don't forget that I won't wait. I won't just keep my fund idle. It means that
Okay.
I can actually just put in like a 60 days treasury bills, so
Okay.
as to actually be able to actually get a bit of return while I'm actually waiting for that. But what percentage of my money will I push to that? Maybe like about 20, so maybe like about 50%. So it means that if I have 50
For which
million
one now? Where are you putting 50%?
into Dangote,
Okay.
so but don't forget that before putting into Dangote, I will actually put in a treasury bills, a 60
All
day
right.
treasury bills, so that it can
Okay.
actually mature in time for the settlement of that obligation. And on the other side of the remaining balance, I have 3 stocks that I will put my money. And
Okay.
I'll put it in ratio of 60, 30, 10. I'll put 60% in Access Bank.
60% in
I'll
Access
put
Bank.
60% in Access Bank because
You,
I
you
feel
sound
that
very bullish.
and I think because I feel that when Access is fully related, Access is a stock that can trade 17 and nobody will feel that it's trading is over traded. It's actually overvalued.
Okay.
When you're looking at on asset side, assets is currently the bank with the biggest level of assets in Nigeria.
Yeah. I
So
mean that
on
that
asset
needs
side,
to that need
but the
to
problem exactly the issue is that they've not been able to sweat it very well.
yeah,
But when you look
that's what
at
I
their
was gonna
last
get to.
their half year result last year, we've seen a bit of traction with the diversification of their revenue into from other with other parts of Africa. That's one way or the other that actually help that. So I will put like about 60% in that. I'll
In
put thirty
assets.
percent in MTN
Okay.
and I'll put 10% in WAPCO.
In WAPCO. So
Yeah,
60% in assets, 30% in MTN, and 10% in WAPCO. Yeah.
yeah.
So
Because I
that
know
makes
that the
sense.
WAPCO, the WAPCO game, when these Chinese are fully awake, they will give that industry a run for their money.
All right. Thank you so much, Deepo. I think it's been, a wonderful time chatting again.
Thank you very much.
No better place to end it there. I mean, so you've seen how he's going to deploy funds if he has fresh capital. So it's been a wonderful time hanging out with you, Deepo. Always a pleasure listening to your insightful and detailed analysis.
It's always a pleasure for my side as well. Thank you for always having me around.
All right. Thank you everyone for joining us today. Please like this video on your way out and please subscribe to the channel, hit the notification bell. And if you have any questions, please provide them on the comment section and you'll be sure that we'll be reading those questions, reading your comments and providing answers to any questions you may have. Thank you everyone and bye. We are out.